Welcome to Truth, Money, and Freedom. Today is Tuesday, April 16th, 2019, and I'm going to share a story with you real quick here. I don't talk enough about something that I know quite a bit about, which is silver and gold. There's a story on Zero Hedge today. Gold and silver have been pushed down pretty hard, once again by, notional silver and gold. In other words, paper future markets. Um, Before I get into what happened, it's very important to understand there's no price discovery mechanism in our markets anymore. Remember, I've talked about this before. Our markets are completely distorted because of all the money printing, because of the cheap interest rates. There's a lot of money currency sloshing around the system right now, and it's used for all kinds of nefarious purposes, but one of them is literally to distort fair market value. So let's talk about gold for a second here. Gold and silver have been hit real hard, literally in the last 8 to 10 hours. And the title of the story is Gold Dumps as Someone Decides at 8:30 Eastern Standard Time is a perfect time to puke up 1.5 billion in notional gold. Notional gold is paper gold, it has nothing to do with physical at all. But that's how they determine the price of gold, is by trading of paper representations of gold. Well, this is how they actually manipulate the gold and silver market. And who are they? That's a very, very good question. And I'm going to answer that for you. They are the banks, the big banks, the central bank, which is the Federal Reserve, also the Bank of England, and also the governments that represent or are represented by those central banks. So it'd be England and the United States. That's how the price is set in the West based on the dollar. So leverage. Let's talk about that for a second. Leverage, it means basically how much paper they have versus how much physical they have at the COMEX or the LBMA. And there's only two sources I can go by, and I'm going to have to side with Andrew Maguire. And there's approximately 200 paper ounces of gold for every physical ounce of gold held at the COMEX. And there's approximately 520 paper ounces of silver for every physical 1 ounce of silver held in the COMEX. So literally, the trading of this paper determines the price of the physical. And it has nothing to do with the amount of money it takes to actually bring silver and gold out of the ground, to actually pre-refine it before it goes to the refiners, where they actually get it to a usable state for investment grades or for any other matter, for instance, for industrial use. So this morning, um, basically someone actually literally threw 1.5 billion in notional paper gold onto the market, and basically for whatever price they could get for it. This is what's been going on for many, many years. This is why you see these sudden downfalls in the price of precious metals. And that's controlled once again by the paper markets, which have nothing to do with actual price discovery. This is how governments, and by the way, let me be very specific. The U.S. government is very interested in pushing down the price of silver and gold. They love to do that. So do the central banks, and so do the big banks. You may ask why. Say, why would they do that? Well, because gold and silver is direct competition to currency. So the pound, the dollar are always threatened by gold and silver, because gold and silver have been money for over 5,000 years. So they're quote unquote going after the competition. So this is how they do it. And I'm going to bring up the price here real quick. Just a quick way of looking at the price. $14.84 per ounce of silver. Let's see, $1,278 per ounce of gold. Now, I'm not really 100% sure how undervalued gold is right now. There's so many different ways of looking at how undervalued gold and silver are. But I will tell you this, silver really can't go a whole lot lower than that because mines are closing. Because actually they can't, there's a lot of companies that literally can't take it out of the ground for that amount of money. So it costs them a dollar, $2, $3 more than that, literally to dig it out of the ground, to refine it, to, basically a state where it can go to an actual refiner. So this is something we look at in Truth, Money, and Freedom quite a bit. When silver is smacked really hard like that, we consider that an investment opportunity because if they keep it this low or push it much lower, you have a what's called a supply demand problem. So I consider silver money. I always have. I consider gold money, even though the government doesn't. Um, but silver, of course, has enormous potential to leap much, much further up than that. Gold does too, but by percentages, silver could probably go and make you a whole lot more money than gold. I don't want to get into all the intricate details of how high it could go or why, but I just want to let you guys know when you see numbers this low, you may want to add some silver or gold to your portfolio. And I'm not talking about paper, I'm talking about the physical metal. Actually, get it in your possession. Because once again, governments and big banks are torturing gold and silver because they are direct competition to the US dollar. They are direct competition to the English pound. So they hate gold and silver. They love to push it down. But one other thing that's really important for us to remember is Basel III. Central banks are accumulating gold at a frantic pace right now to use it as basically a reserve. So basically something they can print more money against. So if central banks say gold is not money, but it can be valued, you know, uh, as a tier one asset for them to be able to hold in reserve to back up the money that they have printed, that means it's money. That means it's money. So basically, if you hear the Federal Reserve Chairman or the ECB Chairman or the Bank of Japan Chairman, Bank of China, I mean, pick your central bank. If you hear any of them say, "Oh, gold's a barbarous relic," and by the way, we have heard that in the past from these guys, just forget what they're saying. Just look at what they're doing. They are accumulating gold. Now, as far as silver goes, I'm not sure if central banks are accumulating silver, but there's a big story, that's been around for 6 years about J.P. Morgan accumulating silver. These banks say they hate these metals. They're barbarous relics. They're worthless. They don't provide dividends. They're useless lumps of metal. But at the same time, they seem to be storing quite a bit of it and accumulating as much as they can. So remember now when Jamie Dimon said how much he hated Bitcoin, how worthless it was a Ponzi scheme. And by his words, the market literally gave up about $1,000 in value for Bitcoin. And then JP Morgan Bank in England bought $3 million worth of Bitcoin once it went down $1,000. These are what these guys do. They push down the price of assets because they don't like to pay full price. So silver and gold are real money. They're tangible assets. They have intrinsic value, and we've talked about that before. They have value beyond the use of money. Both of them do, silver and gold. So when you see these prices hit this low, if you have a little extra money on you, it's a good time to go ahead and buy a little bit of it. And if you want, you guys tell me in the comments section, where do you go? Who do you trust? I'll be very happy to let you know the dealers that I have dealt with. I love Golden State Mint. I love SD Bullion and JM Bullion and AppMex. I have bought from all of these guys before, and they're all really good outfits, and I have never been let down. So if you have trust issues, with buying physical, you can always go to your local coin dealer too and pick up a silver coin or two when you see these prices get this low. Now there's a premium. You will not get it for $18, or I'm sorry, $14.84. You'll pay a little bit more than that. They call that the premium. That is normal, and that's just the way things go. But at any rate, I wanted to make you guys aware of these low prices right now. Also, I was looking at these numbers, and once again, I don't really care what these numbers are because the central banks are printing so much money and throwing it into the markets. This is just an illusion. The Dow, the Nasdaq, the S&P, I mean, take your pick. They're all illusions. Japan, the Hang Seng, London, the FTSE, the DAX, all illusions, every one of them, because they're printing money and just throwing them in the markets. Um, so I'm not a really big fan of looking into that. We'll look at the bond yield curve, which has somewhat healed, as you can see here. But the curve has happened. It's already happened. So the damage has been done, and I will keep you guys up to date on this, but it doesn't really matter if the curve heals now through manipulation. The curve has happened. The smart money has spoken, and we can probably still expect a recession in the very near future. We may already be in one. We just don't know it yet. So just basically to keep your mind on that one as well. And apart from that, it does not escape my attention that oil is still in the 60s here. I pay attention to that one. I'm always interested in where oil is going. But that's really what I wanted to talk about with you guys today was the gold and silver prices. Um, Take advantage of this if you can. If you can do it, buy a little bit. And you don't have to buy a whole ounce of gold. Buy half an ounce of gold, a quarter ounce of gold. Silver's so cheap, it's it's dirt cheap. And I literally mean dirt cheap because it is cheaper than it is to get it out of the dirt. So you guys may want to consider that. And I am not saying back up the truck. I am not a financial consultant. Um, so I'm just saying that that's a really, really attractive price because it is below the price it costs the miners to get it, for many miners to actually get it out of the ground. Some miners can do it for cheaper than that. Um, but I would say it's very near the halfway point. About half of the miners pay that or more, and then half of the miners pay that or less. So you're really at that magical place there, and I'm talking about the primary miners here, not the secondary miners. Um, but that's what I wanted to share with you guys today. And once again, don't worry about these numbers, gang. This is, like I said, total illusion, and I can prove it to you too. Let's look at PE ratios. Anything above 13 or 14 is a bad deal. American Express, well, that looks somewhat normal. Apple, a little tiny bit overvalued. Look at Coca-Cola, a PE ratio of 29.9. Boy, my parents and grandparents wouldn't touch that with a 10-foot pole. That is way overvalued. Look at, shoot, Home Depot, 21.1. Let's look at a few more stocks and their PE ratios. Look at Walmart, a PE ratio of 45.7. That is way, way, way overvalued. Way overvalued. I wouldn't touch that at all. But it seems these numbers don't actually matter anymore. People invest, or banks invest, or the Federal Reserve invests and keeps pushing these PE ratios higher to the stratosphere, nosebleed section, and it just doesn't make sense anymore. None of this makes sense. The PE ratios used to matter. That's how you judged whether or not a stock was overvalued or not, was the price to earnings ratio. So I don't know, basically what people are thinking if they're investing in stocks that are that high. But like I said, it doesn't seem to matter. We've seen Netflix, at 400, a PE ratio of 400. That means 400 years to justify the stock price that you're paying right now. It'll take 400 years of earnings at its current earnings to justify the stock price. Um, Equally, look at Walmart. It'll take 45 years to justify the price that you pay for that stock right now based on their current earnings. That's what that means. Okay, sorry, didn't mean to get into a bigger thing here. Really, it was about gold and silver, and because of the manipulation of gold and silver that happened overnight, silver is a pretty good deal right now. If you have, basically a few bucks to spare, it might be a good idea for you to collect a few coins. You could do it at your local coin dealer. You can do it online, but do consider it. And I am a big proponent of gold and silver. Once again, I am not a financial consultant, though. I am not a financial consultant. But this is about storing your wealth for the future. So think about that. Okay, gang, that's all I have for you today. I hope you all have a blessed day. Take care, gang.